Good evening. Hope you all had a wonderful Wednesday. Today the market rose due to the White House negotiators saying that they aim to reach a deal for the new coronavirus relief package by the end of the week. The tech-heavy Nasdaq gained 0.52%, while the S&P 500 gained 0.64%. The Dow gained 1.39% as shares of Disney rose 8.68%. It does not appear that workers are going back to work at a fast rate, indicating that the economic recovery may be lagging. ADP reported an increase in private payrolls of 167,000, which was drastically lower than the expected rise of 1 million in private payrolls. This is in stark contrast to June, which was an increase of more than 4 million in private payrolls. Please note that the number presented by ADP and the actual tally recorded by the government can differ widely and have varied significantly during the pandemic. On top of this, jobs numbers are usually revised sometime after they are released. Regardless, it appears that the U.S. job market will continue to be significantly short of the 19.7 million jobs which were lost in March and April. We will get the government's non-farm payrolls count this Friday. U.S. exports and imports both rose in the month of June, which happened to be the first time this occurred in 6 months. U.S. exports rose 9.4% when compared to May and totaled $158.3 billion, according to the Commerce Department. Imports rose 4.7% to a total of $208.9 billion, narrowing the trade deficit to $50.7 billion, or by 7.5%. These gains represent an economic recovery to some degree, but levels still remain far lower compared to what they were before the pandemic. The Institute for Supply Management's non-manufacturing index of activity in industries such as travel, healthcare, restaurants, and real estate rose to 58.1, up from 57.1 in June. IHS Markit said its U.S. Services Index edged up to 50 in July, up from 47.9 a month earlier, indicating a very slight expansion as readings 50 and above signal expansion and levels below that signal contraction. 15 of 18 industries tracked by the ISM Index reported increased activity, led by transportation, retailing, and education. U.S. and Chinese officials have agreed to meet on August 15th to assess China's compliance with the bilateral trade agreement, which was signed earlier this year. The main focus will be on the Phase 1 deal, which includes China's commitment to purchase $200 billion of U.S. goods over the course of 2 years. So far, China's purchasing has been far lower than their goals. As of June, China's purchases of all products covered by the trade pact were $33.3 billion, only at around 47% of their year-to-date targets. This meeting will be a big deal, as the relationship between the two superpowers are severely strained, and the trade pact remains as one of the only remaining avenues for the two to engage on matters of mutual concern. Gold is continuing its bull run, which has been accelerating as of late. This year's sharp drop in yields on U.S. Treasuries to levels below the expected pace of inflation is making gold, which doesn't generate an income, more attractive as a store of value. Meanwhile, Brent crude oil rose 2.4% to $45.51 a barrel, which is the highest price since March after Russia and Saudi Arabia engaged in a trade war. Price increases were driven by investor optimism, falling U.S. inventories, and a weak U.S. dollar. The majority of sectors ended in the green today, led by basic materials, which gained more than 2.1%. Consumer services, financials, industrials, and oil and gas all gained more than 1%. Tech was in the red, however only by a slight bit. Telecommunications and utilities both fell more than 1%. Small cap stocks outperformed every other size of equities today. Overall, everyone ended in the green, but growth as a whole performed the best when looking at the different classifications. Shares of Assurant rose 14.12%, as the insurance company reported a nice beat on bottom line estimates, but missed on top line estimates. Net income was up 24% on a yearly basis, though. On top of this, they raised their fiscal year 2020 guidance and are resuming their share repurchasing program. American Airlines was the second best performer today, as shares gained 9.5%. This move comes after more than a dozen Republican senators announced that they back a $25 billion federal aid plan for the airline industry, as airlines continue to be hurt by the virus and the slow recovery in travel demand. No one in the S&P 500 performed worse than Arista Networks, which had their shares fall by 10.93%. Yesterday, the cloud computing company posted really good earnings, beating on both top and bottom line estimates, however, not by immense margins. It is unclear as to why shares fell so drastically. The other loser was Microchip Technology, which is a semiconductor company. Shares fell more than 8% after the company reported earnings yesterday evening. The company managed to beat top and bottom line estimates, but again, not by much. On top of that, the company announced an increase in their dividend and provided inline guidance, but was on the softer side. Getting into earnings, we'll start off with CVS Health, ticker symbol CVS, which is a healthcare company that not only owns the pharmaceutical stores, but also owns Aetna, which is a health insurance provider. CVS reported a nice double beat this morning. Non-GAAP EPS finished the quarter at a gain of $2.64 per share, topping estimates by a large 72 cents. Revenue was up 3% on an annual basis, as the company recorded revenue of $65.34 billion, which beat estimates by $1.05 billion. To make things even better, they managed to beat on operating margin estimates and announced better than estimated guidance. Regardless of the nice earnings, shares fell 0.89%. Next up, we have Moderna, ticker symbol mRNA, which is a biotech company, notably known for the coronavirus vaccine candidate. This morning's earnings beat on both top and bottom line estimates. GAAP EPS was a loss of 31 cents per share, which was better than estimates by 3 cents. Revenue totaled $66.35 million, which represented top-line growth of 407.3% on a yearly basis, and was better than estimates by a large $42.11 million. Shares ended the day down 3.39%. Next up, we have Wayfair, ticker symbol W, which is an e-commerce company that focuses on selling furniture and other household goods. Wayfair had phenomenal earnings this morning. They beat non-GAAP EPS estimates by an enormous $2.08, as they had a gain of $3.13 per share. Revenue surged by 83.8% on a yearly basis, as they tallied revenue of $4.3 billion, which topped estimates by $180 million. This is Wayfair's 11th consecutive beat on top-line estimates. Shares surged an additional 3.63% today, as they are up more than 1,000% since their March lows. Next up, we have Progressive, ticker symbol PGR, which is an American insurance company. The company beat GAAP EPS estimates by 45 cents, as they were able to come out of the quarter with a gain of $3.04 per share. Shares ended the day up 0.41%. Next up, we have Roku, ticker symbol Roku, which is the brand of digital media streaming devices. Roku had a GAAP loss of 35 cents per share, but still beat estimates by 20 cents. Revenue grew by an exceptional 42.4% on a yearly basis, as they beat revenue estimates by $41.58 million due to their quarterly top line of $356.1 million. Active accounts grew 41% as the company benefited from the virus and people needing something to do. Shares are currently in the green after the positive earnings report. Lastly, we have Zynga, ticker symbol ZNGA, which is a mobile game developer known for games such as Words with Friends, Farmville, and Draw Something. Zynga had a GAAP loss of 16 cents per share, which was worse than estimates by 2 cents. Revenue managed to soar by 47.4%, as the video game developer also benefited from the pandemic. They had revenue of $451.69 million, which beat estimates by $17.6 million. Currently, shares are trading higher by more than 5% after earnings. That is all that I have for tonight. Hope you all enjoy the rest of your evening, and I look forward to seeing you again tomorrow.